Okay, good morning, everybody. It is Wednesday, January 26th, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. Just to quickly review yesterday here, remember we were still in, obviously we're in this really strong downtrend. We said we were trading, so yesterday was, the day before yesterday was all this price action over here. And when we came into the open yesterday, we were right within the day's price action from before, right? The day before that, we were sitting right around 50% of that previous day. And we said, holding above 50% of the previous day was a bullish clue. But overall, we were in a crazy downtrend. We did have some bullish arguments that could be made from the lows, but we needed to see basically the bulls push up through the first level we talked about yesterday. I mean, outside the fact that the KP was sitting very close to the overnight, the highs of the overnight session from the closest area to the open here, and outside of that one KP that was really close there, we said we had 43.50 to 51 as the first level we wanted to break through, and then we had that our power level there at 43.55 and our eye level at 61. We said it was very closely stacked, and I believe we even had a CP up here we had to get through. And that reminds me, I'm going to have to update. These look like these are the prediction points from yesterday, I'm pretty sure. So yeah, these are the prediction points from yesterday. I'm going to have to update that before we get into the morning session. So we had to get through some of those levels, but 50 right there, 50 and 51, where we had a prediction point and an eye level, was the first level we needed to get through. And there was a swing low back here just a few ticks above that level. So that was kind of the first thing we needed to see the bulls break through and then get through some of the other levels before I was really sold on being interested in buying the market. And let's take a look at what happened just after the open here. This is the 620 bar. Here's the bar that closed at the open, and then here's the bar that started forming after the open. Look at what happened. We pushed right up to the level we expected to hold. I got short there. I told everybody I wasn't seeing a great divergence, but we were set up in a beautiful area. And if you look at our short time frames and go down to the tick chart, there was actually a VWAP going right across the screen right in that area as well. So we literally kind of pushed right up into VWAP, and I don't know if I can get to that point in the chart quickly enough here, but we pushed right there. Where is it? Right into VWAP right there, and you can see there's my red candle or my red arrow for shorting here came right into the VWAP and bounced right off of it. Came actually right back into it on a short time scale, retested it, and failed from there. And that's where I gave my first trade call 7 minutes after the open, and we were able to take this short all the way down. So let's go back up here and let's get into today. So caught that move out of the open. It did continue to sell off, and then it was a sideways day. We never broke out of the previous daily range, and we basically chopped around 50% of that previous day until the end of the session, and we got this kind of fake out for the bulls and then a fake out for the bears, and then that brings us into this overnight session for this morning. And as you can see, we held 50% of yesterday's price action through the overnight session. In fact, we came right down to our eye level to the tick and held it right there on the first push out from the Globex session, 50% of that leg right there. Couldn't be much better of an entry there if you wanted to try. And take a look what we had to the left-hand side of the screen. Resistance once, resistance twice, and who knows inside of this 10-minute candle here if we did have some nice clean reactions off that level as well. And then you can see here this 10-minute candle opened, pulled back right to that 50 level and bounced a little bit earlier than that. So beautiful little area for a potential or a try long, even though things were pretty ambivalent in here. Not a bad level to try, and look at that. We held, and then here through the overnight session, we pushed right into the 27% extension here, 89.50, got a pullback, pushed all the way up into the 61.8 here, got a pullback, and now here we are coming into the open for today. So pretty nice push right to the 61.8 extension of that leg, and having a little trouble right now. So let's go ahead and just kind of do our typical and dial down. We're going to bring the ultra high time frames up, swiftly move through those. If you want to see what we said on that, just go to our Monday video and you'll see a little bit more on that. But pretty much there's your 3-month chart, bearish engulfing bar, right? There was the previous 3-month bar. We've now engulfed the entire candle to the downside. We did get a really good recovery from that 42.12 low, which we'll look at, but bearish engulfing on that quarterly. Our monthly now, again, we've been watching the bearish divergence from the highs, wondering if the market was actually going to follow through for a while there, back from about November, December of last year. So now we got the follow through. Again, a bearish engulfing monthly bar, just like we saw on the 3-month. So, you know, bearish divergence, bearish engulfing bar, everything's looking pretty shaky up top. And again, we've been watching this since all the way back. Don't know why that's not letting me. All the way back, like when we were up in November and December of last year, going, there's a lot of wonkiness up top here, and then we pushed to a new all-time high coming into the end of the year and into January. And still, as we pushed to all-time highs, we were getting more and more bearish signals. If you guys remember, how long did we say the monthly, the weekly, and the daily were all showing this strange pattern where price kept pushing to higher highs and higher lows, RVI kept pushing to lower highs and lower lows, and now we're getting pretty much, it was in the cards for a while now. It's just a matter of when was that fall actually going to start to happen. So regardless of what people tell you on the fundamental side, you know, interest rates and war with China, all these kind of things, the technicals were already telling us we were expecting some type of correction in the market here for like I said, 2 or 3 months now. We've been waiting and expecting it. So let's get down now to our daily. On the daily chart, there's that huge wick we talked about just a few days ago, and I believe I can go ahead and just highlight it just to keep that in mind. So huge reversal candle, in my opinion. We said back here we had it, right, all the way down on this retracement of this leg here. Looked like we could potentially reverse out. We talked about that yesterday. Pretty good reversal candle here that looked like we were going to push. We got the push. There are some instances where it just doesn't work, right? And a lot of times, and we'll get into candlestick analysis, a lot of times when you have this potential reversal candle, not only is that an indication to go long, but it's an indication to get short if they can't hold the low of that candle. So once they break that candle over here, it was now pretty much an indication to go get short, expecting follow through to the downside. So over here, pretty much the same situation on the daily. We've got the big reversal candle, huge wick to the downside. Yesterday's daily bar, you can see we were intraday. We never were able to break out from that huge range from whatever that was, Monday. And now here we are on Wednesday morning, and you can see the daily candle already. The market hasn't even opened. We've got another 15 minutes before the open. We've now gone ahead and pushed up and broken the high of the previous daily candle. Now this morning, from this perspective out here, the most important thing we need to do is get through the high of that major reversal candle. And that would be kind of our first little clue, this push down, and now we're finally breaking above that high right there, right? So this might be the beginning of the attempt to, you know, turn things around, right? So we'll see if anything like that occurs. Now this morning, you can see 50% of that previous day, 43, 41, 50, we are way above that, right? And we've just kind of acknowledged that. We're above the previous candle high. Now it would be nice to get through the Monday high. Get through that. And then there's a swing low back right here on this daily chart. The low from whatever it was, Thursday or Friday, Thursday of last week, Wednesday of last week, up there at 37.75. That's going to be important to get through. And there's one other level I want to mention that we're going to see here on the 4 hour. So the daily here, again, looks like we have this attempt to turn around. And then, again, look at the levels we talked about. We talked about pulling back. Potentially 42.12 would be a good level, give or take a few ticks, a few points. And a little bit deeper, I mentioned this yesterday, we do have this next area down here around, what did I say? I don't know. I think I said 4150 to 4160. On a daily chart, that's a 10-point range. It might seem big, but from the daily perspective, that's very small. So this little range over in here, if we do continue to sell off, would be that next area that I would expect to see some type of bounce, just like we saw from that level. So let's go down now, and on the 4-hour, what I want to talk about is what are we pushing up into? Um, okay, what are we pushing up into here? So we came up and we found some resistance in the overnight session at 23.25. There's something that's sticking out to me, and we actually, if you see in the alerts channel, I just put out two new levels, 43.34 and 44.29.50. 44.29.50, if you look at where we are in current market price, or at least the high of this overnight session at 23.25. If you look back here, there's this swing low on this 4-hour chart. Again, the 4 hours just giving me the ability to kind of really zoom back here and see what structures in the market are we now pushing up into as we get this attempt by the bulls to turn the market. And what I'm noticing is this 29.50 swing low. Not only was it important there for this really strong bullish push out from there, but if we go back, there was a lot of rejection in the market from there. And again, keep in mind, this is a 4-hour chart, so you can't see the details, but right around that area we failed over here. We held this area multiple times back here, and then over in here we got a lot of rejection right around there as well, right in this area. So I'm watching 29.50 in the most immediate term. Remember, the high of the overnight is 23. So I'm just pointing out 29.50 here, and then we did have another eye level just a point above that. That little section there could be trouble as, or assuming the bulls get this nice little traverse higher here this morning. So that would be our first expected area of resistance. And then let's take a look. What else do we have? What can we see here on the 4-hour? If we do continue to get through that 29 to 31 area, the 38% retracement of the whole push up is 40.25. And I believe we have a eye level just a little bit further above that, 45.50. That 45.50, in my opinion, is the better level. It very well could hold to the tick at the 38, but we see a lot of times they kind of break through a little bit through some of these retracement levels and then turn. So not too surprising if they actually pushed up into that 44, 45.50 area, which again, if we zoom back and look, there was really strong rejection from that area a few times, really strong, multiple times there was rejection. We got this really strong bounce out of it all the way back over here. So there's reasons for that level, and that would stick out to me. And then if we continue to chug through the 38 retracement this morning, we're probably going to end up pushing up and finding some trouble all the way up at the top end, somewhere around this 44.70 area. And then a little bit deeper, we get right back into, and I'll highlight it so you can see this a little bit more clearly, that swing low in the market right there, which if you, let's see, bring it over here, was also that area of trouble when we were selling off and bouncing back up into that area. So if we keep going, that would be that next trouble area. And then notice 50% of the whole push down brings us right into the swing lows from back, kind of maybe a few days ago up here. And then the major swing low for that rip out that kind of coincides with it. Again, right up here, I don't know, give or take 10 points, 45.20, 45.10 area, right? And remember, this is the zoomed out perspective that we're looking at here. So these are just some things I'm noticing from the larger perspective on the way up. On the way down, if the bears jump in and start selling off, we've got some levels to look at, and we'll consider that as we dial down here. So again, just be aware of those levels above us if we do get the push. Might be areas where you want to take some profit as the market pushes. Let's go down to the 60-minute, and there's the 29.50 that we added to our eye level list. But remember, a few days ago, we had this highlighted in yellow because we were watching it. And again, this is one of our new levels. If you go back and you look at 29.50 here, how many times the market came in and found resistance, found really good breaks and pullbacks and supports right off of it. And then just recently, coming back months after we were over in that part of the chart, we came down and bounced almost to the tick right off of it, broke down below it and came up and failed right from it, right? So again, this morning coming up, that's our first little area of contention. I'm not saying it's most likely to fail from there. I'm just saying that's the first area that the market might have trouble with. Because it's been used so many times over here, maybe they'll just cut right through it, right? But I just want you to be aware of that. So from the 60-minute perspective, I don't think there's anything else to really add to the picture here, except for now we want to consider what do we have below us here in this kind of immediate range here. So we have the lows from not yesterday, but the day before, all the way up to the highs of this area of chop, which were basically was the highs from that day back 2 days ago. If we draw a fib on that, I just want to bring up, we pulled back on from 2 days ago, the highs of what was it, Monday, going into the Globex session. We pulled back, we essentially held the 61.8 retracement, right? It peaked through and then held and started pushing, and the 27 extension would bring us right essentially up to our 74.50. So up above, that would be a good target. Again, assuming they can get through 29, assuming they can get through that 45.50 area, that is the 27 extension, and we know how well that ends up being as a first target to the upside if this does follow through. Now, if it doesn't, and we start pulling back, first thing I want to do is look at just the fib from yesterday's low up to the highs we've made here in the overnight. That's one of the major kind of legs we do like to look at. Don't get me wrong, there's the entire leg itself, right? But we do have the more immediate local leg from the lows of the day before up to whether or not the high was in the overnight or from the day before, then you draw it to that. And in this case, the high of the overnight is higher than the day before, so we'll draw it up to there. And if we look, as the market pulls back here, the 38 retracement is give or take that eye level at 61 to 65 there. The major little swing high here was, let me get the number, 43.70. So we have 70 and then 65 and 61 there. Again, it just is what it is. This was a chop zone. Just be prepared. Lots of chop for 2 days straight in that area means we're going to have a lot of good little areas of support and resistance. So if they pull back here, there are some levels we'd like to see the bulls hold if they're going to have strength this morning. If they pull back, the first level, the strongest indication for the bulls is a hold either where we are right now or somewhere above the orange line, that power level there. If they hold 78 and they start ripping, that's a really good sign for the bulls. Again, keep in mind, just because they hold it, that doesn't mean, oh, we're guaranteed a 50-point bullish push, but that would be that first area. If they break through there, again, we said there's the swing high at 70, the 38 retracement, and the 61 right in this area. If they get through that, remember our magenta power level, 50% of the previous day, also pretty important to see the bulls hold for that bias to the upside. And then a little bit deeper, the 61.8 brings us just about to the next major eye level at 24.50. So we've got these below us. Keep in mind, the close of yesterday was 43.06, and there is always a possibility they go ahead and chug all the way back to the close of the day before, fill the gap from where we opened this morning, and go ahead and then bounce out and really rip from there. There's a lot of scenarios, right? There's a million different things the market could do. There are so many little iterations with these levels that could happen, and all we're doing is getting prepared for what levels make sense for holding, and then we react as the market starts to move here. So there are all these potential possibilities. Again, breaking below the previous daily low, not really a great sign for the bulls, obviously, right? And then 42.62 is that next major eye level, and then we're down to the lows of the day before where we had the rip from 42.12. And then keep in mind, we had that one level drawn across here. Once we break through that low at 42.12, where did I draw that level? I don't remember now. I think it was up on the daily. Let's go back real quick. Yeah, so this level here, again, it's going to be a little bit of a range, but somewhere around 41.50 to 41.60 there. So if it does break down below there, we've got 41.50 to 41.60 below. I'm not sure why. I guess I just don't have any new levels drawn below there because I didn't really expect us to correct down much past 4,200 here. So that's what we got below. And I think that kind of wraps things up. I mean, we've got kind of what looks to be a potential bullish correction in the market back up, but we're in a very strong bearish market here. So until we really start to see bullish follow through, we really want to be sellers. And again, if they hold from where we are now, from this 43.98 area, or again, the orange line or the magenta line, we're in what could be the beginning of this bullish territory for the attempt to push higher. And we gave you some levels above as targets if that does start to occur. So maybe that sounds a little bit screwy there. So let me rephrase that. The market looks like we're getting this bullish follow through, right? We're starting to make higher lows with each day now. We're starting to make higher highs as of the overnight session. We're above the previous daily high. We're above the magenta and orange line, both important bullish clues and all that. So it looks like we might get bullish follow through. And if we continue to get this momentum, we do want to try to be buyers. Again, taking profit in front of the potential resistance areas because we are in a strong downtrend, just in case it does reverse from one of those levels. And then again, if they do find trouble, if the bears start to jump in and start to really rip it, then we'll look for some sells. So it's going to be dependent on what we see happen here coming out of the open. And we are just a minute away from the open. So we're going to jump down to the members section to our short time frames here and see if we can't find some trades coming into the open here. So have a great rest of your day.